Good afternoon. Hope everyone's having a good trading week and had a good CPI day today, as we can see here with the report and the charts this morning. We know that the futures and pretty much the entire market dropped sharply following the morning hotter than expected CPI consumer inflation report, which pretty much fueled fears that the Federal Reserve is not going to cut interest rates anytime soon. We'll take a look at some numbers in just a second, but looking at the data here, we can see that the January Consumer Price Index rose 3% on an annual basis in January versus the 2.9% increase, which was forecasted on the monthly basis. The index also rose 0.5%, which is the highest since August of 2023, compared to the estimated 0.3% as well. The core CPI, which excludes food and energy components, rose 0.4% on a monthly basis against the expectations of a 0.3% advance. Annually, it came in at 3.3% versus an estimated 3.1% increase. Supercore also came in hot, so that definitely drove some inflation woes there. And as you can see here, U.S. inflation is now at 3%. So this is our first CPI reading of the year. We can see we got that uptick. Any true surprises here? No, not really. Especially with energy prices, insurance rates. Insurance has been a continuous heated situation. Services also led the way as well. So yeah, it's just one of those things. But one of the things that I am, paying attention to is the Fed Watch tool. As you can see, the probabilities for a rate cut for March, there is no rate cut coming in March. We kind of know this anyway. This kind of just solidifies it. Inflation is still pretty much sticky, but if we look on ahead to like May, we can see that the odds have increased that there's not even going to be a rate cut for May, and even in June they went up slightly, that rates are going to remain the same even through June. So yeah, it's coming down to what Powell has been sending the message on, that they are not in a hurry to cut rates, and we'll just have to keep an eye on the data as it comes in. So yeah, one of the cool, interesting things that came in, used cars and trucks came in at 2.2%, which is actually the largest jump since May of 2023. Lodging and airfares, especially airfares and auto insurance, are definitely the main drivers and the main causes of the higher CPI. I don't know if y'all have been looking at booking flights, but they are expensive right now. I had a friend tell me that it's costing him like $2,000 extra just to go to France this year. So it's pretty wild out there. But let's get into some charts, shall we? That's what y'all are here for anyway, I do believe. But all right, here's the S&P futures. As you can see, yeah, here's your sell-off at the CPI data, and then the rest of the session, we just kind of had this meandering grind up. Again, buy the dip seems to be the case here. If we look at the SPY daily chart, the main question that I am wondering here is, we got a nice little daily squeeze in play. We also have a 4-hour, a 2-day, a 3-day, a 4-day squeeze all across the board. There's squeezes everywhere. So the entire market seems to be gearing up for some sort of move here. And we'll bring up the 3 grid here. We can see that we are coiling, even though that the SPY has made slightly lower highs over the course of 3 weeks or so. We haven't really moved anywhere. We've just been kind of stuck in this range between 611 and 590. And someone's going to blink eventually, and you can see here on the grid here, the dailies on the left, the hourlies in the middle, and the 30 minutes on the right. You can see that we have all these compressions going on. So the market is definitely gearing up for some sort of move. The question is, which direction is it going to be? Or buyers done enough of dip buying that it just continues to build up pressure and shorts finally cover and we push on ahead and we break out of this potential wedge pattern or channel, whatever you want to call it, bull flag, you name it. There's all sorts of patterns in here. And do we break out above this 611 and push into new lifetime highs, or do we finally crack and maybe even fill this gap down here to about 586 or so? So that's kind of what I'm watching. The market's definitely in a wait and see mode. We've had 2 days of Powell testimony. Yesterday we had Powell with the Senate, and today it was against representatives, Congress, and all that. So, you know, when we look at the rest of the economic calendar, there's not too much. We got PPI tomorrow. We got unemployment claims and a 30-year bond auction. That's definitely something to keep an eye on. And then Friday, we have the core retail sales coming up on Friday. So that's going to be some pretty interesting news-driven events. And then if we go ahead and look at next week, we have the FOMC minutes from the prior meeting. And then we got the flash manufacturing PMI, the flash services PMI. So yeah, something's going to give here eventually. So we definitely want to keep our eyes peeled. And, do we continue to give the bulls the benefit of the doubt? Because they continue to buy the dip. And we've been coiling for what seems to be like three weeks. So we're definitely due for a new trend leg, so to speak. And we'll see. And yeah, deeps keep getting bought, and the question is, can it continue? And yeah, we'll see what happens as the weeks progress. If we go look at the NASDAQ, we can see that, yeah, same situation. We're just stuck in this range between 533.82 and 511.5. Are we about to break out? We are in now a mid compression squeeze. We were in a low compression squeeze that has now tightened up even more to a regular squeeze. The hourly is also in a squeeze. We're still trading in above the key moving averages. We're in a strong bull situation here on the hourly with a score of 42 out of 50. So that's pretty darn bullish. But we are, just trading slightly below the trailing ATR. That's the only red flag there. But as far as everything else goes, we have strong thrust. The oscillator's in really good positioning. And yeah, everything looks pretty good here on the Qs. The Dow is still hanging out at lifetime highs, holding on to the daily 21 simple moving average. This is the one that it's not as squeezy as the other indices, but nonetheless still looks pretty bullish as long as we don't lose that daily 50. And small caps have definitely been hit the hardest off of that CPI number, and it doesn't bode well because I was actually long IWM, so I'm pretty much kicking myself in the butt with that one, but that's okay. We've had plenty enough wins throughout the week to kind of negate all that, so we'll see what happens here. We did close in the green, although we got a gap to fill. I would like to see us get back up to 230, but small caps are definitely going to be feeling the pressure for a tougher higher rate environment. And then if we actually look at the rates, if we pull up the TNX, which is the 10-year, we can see that the 10-year did rise about 2% today, back to 4.6%. Still off from our prior peak at about 4.8%. As long as we don't crack 4.8, that is fine. If we look at the dollar, we can see that the dollar was, still kind of muted, but hanging in there. One of the key things that I also want to keep an eye on is really the market internals, and that is if we look at how many stocks are above their 200 simple moving average. About 56% of stocks within the S&P 500 are trading above their 200 simple moving average. So this is, if we look at the prior, we were about 70%, so we're down a little bit, but I would still classify this as more of a neutral bull situation. Once we get to about 60%, that's when it's more more bullish in general. So we'll definitely keep an eye on the market internals. The VIX continues to be pretty darn muted, despite the CPI reading. You know, we hit a high of about 17 and a quarter, and it just keeps getting smacked on down. We are in a high compression squeeze. So the VIX is also looking like it's gearing up for some sort of move. Definitely something to keep an eye on as well. But as far as everything else goes, I did run a scan, but it's not populating, so I'm not too sure what that's about. I know Hood had earnings today, and they absolutely blew it out of the water, hit $1 billion in revenue, and they are trading in the 60s, I do believe. TOS is terrible when it comes to this, so I got to pull up TradingView. Yeah, trading at 63.81. And all right, so there are definitely some interesting names out there. Meta continues to be powerful. Baba had a fantastic move, which I believe Zach played this one as well. You have names like Walmart that looks really strong, breaking out into new all-time highs. And yeah, retail continues to be good. Costco, very nice as well. So definitely a lot of things to keep your eyes open for different moves. Let me see here. It's still not populating for some reason. You got financials continue to leading the way. JP Morgan, Visa, Palantir had their earnings, and they're rocking and rolling above 100 mark. Coin had a pretty good move today, holding that 264 level. We do have earnings coming up. Datadog also coiling up as well after earnings. So there you go. All right, guys, we got PPI tomorrow, retail sales on Friday. It's going to be an interesting end of the week. Is the market going to coil out of this 3-week compression, or, you know, or are we just going to continue to be stuck and trade sideways for forever? Either way, know the levels and trade your levels. I still believe it is a day trader's market. Once we get into a trending leg, that's when we can put on some more swings and see which way she wants to go. But for as it sits right now, day trades are still your friend. There are some really good setups, so to swing, I kind of take that back, because a lot of growth names are doing really well outside of the Mag 7. If we look at the Mags, this is the round hill. We can see that the Mag 7 index is just kind of not really doing too much. It seems like maybe investors are trying to branch out a little bit, catch some of these lagging names, so to speak. So definitely keep an eye out on something like that as well. But all right, that's going to be it for today's video. Which way are we going to go, Spy? Where do you want to go? Nobody knows just yet. All right, guys, have a good rest of your trading week and a good evening, and I'll see you all tomorrow. Bye.